Hi, it's Charlie giving you today's CPI preview. So I'm recording this in the morning, just a couple of hours ahead of CPI. So let's have a quick delve into this and what we can expect. I've got the S&P up, but before we actually look at the technicals, let's consider where we're at. The US is struggling with inflation at the moment. In a way, in many inflationary measures, we've seen PMI reports, both from the manufacturing PMIs and from the services PMIs in recent weeks. Although the PMI itself activity has dropped, prices paid have been up. And then recent surveys have also shown that the cost of employment have also risen. Among others, reports just recently as well. So we're certainly seeing these inflationary pressures still around, and yet we have seen, like I said, the headline PMI numbers coming in lower, and also those non-farm payrolls just a week or so ago came in lower. So we've got some weakening economic data overall, but with some still stubborn inflation numbers. So the risks, of course, coming into today are that those inflation numbers remain elevated and potentially beat the consensus view. So the consensus view on the month is for core inflation to come out at 0.3%. Now, that is a drop from last month, but nevertheless, I've got this chart here from Bank of America. If I bring it up, and it really gives you a sense, if I just make that a bit smaller for you, there you go. So it gives you a sense here of these monthly inflation CPI numbers. So if CPI last month was at 0.4, if it stayed month after month after month to the end of the year at 0.4, then we'd end up at the end of this year at 4.8%, which is not what the Fed want. Even at 0.3 of 1%, it means that inflation is still going to remain, sticky, comfortably above, as we can see, hovering just below 4% there. It's only if inflation can start coming down to 0.2 of percent on a monthly basis that we start to see those inflation numbers coming down. So anyway, the forecast is for 0.3 of 1%. Now, what happens with those inflation numbers? They don't come in exactly in that particular level. This is on the month. So they might come in actual fact at let's say 0.29 of a percent. So therefore, and then they're always rounded up. So you'll generally see the rounded up number. So they'll round it up if it comes anywhere above 0.25 or above. They'll round it up to 0.3. If it was to come in at 0.24, then you'll see it rounded down the number to 0.2, and that would be a surprise to the market because the market is forecasting. Market forecasters, economists polled, have been looking for 0.3 as an average. So really, it's not just the headline number. There's more than this going on. It's, well, does it come in at, is it 0.3? Is it 0.29? Or is it 0.34, which is then obviously at the hotter side? Or even if it comes in at 0.35, they'll get rounded up to 0.4 overall. So there's so much goes on in CPI, plus all the elements within it, that we're just talking at the moment of the headline number. But within that headline number, there's lots of component parts. Which areas, like for example, autos, are they increasing overall in prices paid or decreasing? Shelter, a massive component within the CPI report. There's a big one that Powell's been talking about. Rents, and they're looking for the rents, hoping that the rents, as people stay put, as they sign new contracts, that the rents don't jump up as much, and therefore inflationary elements within that actually start to come down. They just don't know when that might happen. So there's all sorts that comes in here within the inflation reports. So you get the headline number, and then there's the breakdown of all the component parts. And I've just picked out two here. So it's not a straightforward entity. So this is why you can often see the markets, when the news comes out, move both ways. It can move one way on the headline. So let's say let's give you an example. Let's say a bit like yesterday's PPI. PPI came out slightly stronger yesterday, but then once the report was read through, traders realized that there were revisions to the downside on last month's PPI, which then meant that although the initial move was to the downside here on the S&P and on the currencies, they then rebounded back up once traders realized that actually it wasn't quite so bad. So talking of CPI here today, what you could end up happening is a headline number that comes in, strong, let's say, but there could be some component parts which are showing maybe some turns in certain areas. I'm just making it up at the moment. So hence why you could see price goes down first and then come back up, but it really does depend. So you've got the reaction to the news, which will be on an immediate, and we should expect some decent volatility, especially in the currencies. They're much more sensitive. The stock markets will move as well, of course, but the currencies are even more sensitive. So one way or another, if they move to the downside, don't automatically think that's it, that we're just going to carry on going down, because there could be some component parts in there that change things around, much like yesterday. So, but nevertheless, we should expect volatility on the day. So whatever happens here, we should be expecting some reasonable volatility. For the S&P, using this as a proxy on the stock indices, obviously very quiet at the moment, no surprise there, but it's holding just shy of the all-time highs from just the beginning of last month. So are we about to break out? And what would make it break out? A lower inflation reading or some element, even if the inflation reading comes in line with forecasts, but there are some component parts which are starting to see a dip, that might be enough to see the markets cheer that. The markets want lower inflation. So if somewhere within those reports, whether it's on the headline numbers coming in line or lower, that would see the stock markets go higher. If the inflation numbers come in hot, then we'll see the stock markets fall. It's as simple as that overall, but it's not always as simple as that once you get the report. Sometimes it is, and you get a hot report like we did a month ago. So on the 10th of April, which was there. So this down bar, this big red down bar, that was last month's inflation report, which did come out hotter than was forecast. And so we saw stocks fall, and then they held for a little bit, and then they fell away. And it's the same if I come and use the euro dollar as a proxy here as well. That was the size of the move in relative terms that it had last month on a higher inflation number. So the capacity, going over to the currencies now, for a large move is there. If those inflation numbers come out hot, the euro could be back down testing 107 relatively soon. Not necessarily all in one day, although it could do if it had a range like last month. Remember last month the euro was going up into inflation and then sold off heavy afterwards. So that is the downside risk. If the market, like I've just said with the S&P, gets a sense that inflation is turning a corner, certainly in certain areas of inflation are likely to remain inflated. But if there is some hope within those inflation reports, then what we will see is a breakout here on the euro. I've got a trend channel here, and then we'll get more of a confirmed breakout, most likely to the upside, and it'll be the same with the other currencies as well. So big risks on both sides of the market here coming into today's CPI. So just some food for thought coming into it. If you're trading it or you're trading after it, good luck to you. And And we'll see how those reports come out and how the markets react to them on the other side.